QuickBooks Pro Desktop 2021 Invoice, created from check, created from purchase order. In other words, we're going to be populating our invoice that we create from information from a check that we entered in a prior transaction, that check for the payment of inventory or the payment for the purchase of inventory, that check having been populated in part from a link to the purchase order, which was created prior to that. Let's get into it with QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars homepage. We currently have the open windows open. You can open the open windows by going to the view dropdown and selecting the open windows list. We're going to be creating another invoice, but this invoice will be populated with a link, or we're going to populate it partially through a link from transactions that had happened in the past. Let's recap those transactions. First, we said that we wanted inventory from the vendor. We requested inventory from our vendor purchasing the inventory, and we used a purchase order to do that. Remember that you would only use the purchase order in the situation where you're not paying for the inventory at the point in time that you're requesting it, as might be the case if you're buying something like online, like Amazon or something. You'd have to pay for it at the point in time of the request, but rather the purchase order not having a transaction to it, because it is just a request. We haven't got the invoice, the inventory at that point in time, and we haven't made a payment. Let's take a look at the purchase orders that we created by going to the prior purchase order here. We see we have one for Gibson where we said it was received already, so we've already recorded it as having been received. We have one for Epiphone having been received. We indicated on this purchase order that we had a customer. Now we are the customer of course, Epiphone when we purchased from Epiphone. Why do we have this customer field down here? Because that's an indication for us. It doesn't matter to Epiphone. Epiphone doesn't care, but we can carry that link through the process as we then bill or pay for the inventory, and as we create the invoice, as we will see. So once we get the inventory, we purchased it specifically for this customer, we're then going to turn around and give the invoice, which is what we're going to do now. Now the next step, once we had the purchase order, was to receive the inventory. So closing this out, once we have the purchase order, we would then receive the inventory, either entering a bill at that point in time, or we went right to the check and entered a check. Let's open up the check, and I'm going to try to just go back to one of these checks. So if I go back to the prior check, for example, this one, we see the items tab. It's an items tab, and this check was then populated as a link to the purchase order we made. And you can see the item that we paid for is going to be the inventory item. Notice once again that we have the customer down here. That customer is going to allow us to link this now, and also due to the fact that it says it's billable here, that's going to help us to link this payment that we had for the inventory item to the invoice. So now once we made the payment on this, we can say, okay, now here's the customer. Now we're imagining calling up the customer and saying, okay, now we're going to invoice you because we have received your order from our vendor and are now going to be passing it on to you, creating the invoice and giving, of course, the merchandise at that point. Closing this back out, I'm then going to open up the invoice. The invoice is going to be the next step. I'm going to type in the name. It's going to be Eric Music. So Eric Music, I'm going to say tab. And then we get this pop-up. So the pop-up says the customer or job you've selected has outstanding billable time and or costs. Do you want to select the outstanding billable time and costs? We do, or not, right? And I'm going to say yes. Okay. Now it goes to the time here. So we could have billable time, expenses, mileage. We have an item indicating an inventory item. That's the one we want. So I'm going to pick that up. Now note when we wrote the check, it was only for the cost, which I believe was $400 per unit. But now it's able to pick up the actual sales price because we used an item to do so. So it is picking up the right price. If we just had a normal expense thing that we were billing out on the expenses, then it would simply show the amount that we paid, right? So this is going to show the sales price. I'm going to say okay, and then boom, it populates the whole thing for us, which is nice. So what's this going to do when we record it? And we'll take a look at the financials just like we always do with these forms. I'm going to say, all right, it's an invoice. That means the accounts receivable is going to go up. That's what an invoice does. The other side is going to go to sales, but it's only going to go to sales for the amount we charge, which is the $25,000. The difference being sales tax, $1,250, is going to go to a liability, which is a sales tax liability, sales tax payable. And then we also know that the inventory is going to go down by some amount that's not on the invoice, but is driven by the cost. I think it's $400 per unit. And then it's driven by this invoice, driven by the item. And then we know the cost of goods sold, the expense is going to be going up as well. Let's go ahead and say save and close and check that out. I'm going to close this out and then uncheck this email and then save and close. And then let's go. Also note, I might change the date once we go back in there. So I'll just show you how you could do that. Obviously, we could change the date. I'm just going to change it a little bit. So we're going to go to the reports up top. We're going to go to the company and financial. We'll take a look at the balance sheet. So the balance sheet, changing the dates in the custom reports to 01/01/21 to 12/31/21, 12/31/21. And then I'm going to say OK. So there we have it, and we're going to say the accounts receivable, double-clicking on the accounts receivable. There is the Eric Music. I'm going to double-click on that. And so there we have it. I'm just going to increase the date like 1 day to the 19th. So we'll take it out to the 19th here. So there is our invoice, and it's for it increased the receivable by the $26,250. I'm going to save that change. Okay. And so there we have it. And then I'm going to close this out. The other side is going to go to the income statement. So we're going to go to the reports drop down, company financial, profit and loss, changing the dates from 01/01/21, 12/31/21. And then we have the sales items, opening up the sales items. There's the $25,000, double clicking on it. That's just going to be the sales price, not including the sales tax. The difference of the sales tax, $1,250, going to be a payable. Closing this back out, closing this back out, going back to the balance sheet. We then go down to the payables. So we got the sales tax payable. Double clicking on that, we see our payable of the $1,250 here. Closing this back out, closing, no, not closing this back out. And then we have the inventory going down. Inventory going down by the $20,000, double clicking on that $20,000. That $20,000 is not on the invoice, but being driven by the invoice on a perpetual inventory system. Closing this back out, closing this back out. Then we go to the profit and loss. The other side of that is on the cost of goods sold. Cost of goods sold, there's the $20,000 there. Closing this back out and going back to the balance sheet. We also note that the receivables have been affected. So if I go to the reports up top, we go down to the customers and receivable, the customer balance detail report. And we then see that this was for Eric Music, which is right there. There's the $26,250. The total's adding up to the $27.96, which ties out to the balance sheet at the $27.96. We also have the inventory has been affected, going down. Reports up top. We're going to go to the inventory valuation summary. And I'll make this as of 12/31/21. And there we have the valuation summary. The totals at the $7,932 on the cost side of things. That should match the balance sheet over here, $7,932. Let's do it again. We're going to go back to the home page, and then we're going to add another invoice. So let's open up another invoice, and this one's going to go to music store stuff. So once again, I'm going to type it in there. It'll populate. I'll select it, and then when I say tab, it's going to ask me to add. So do we want to add it again? We're going to say yes, we want to add. And then I want to pick up the item, so it's going to be all the way to the right as an item. That's the one we want, so I'm going to pick that up, checking off that item, and then OK. So it pulled it all through, and it populated for us, which is great. Once again, it picked up the sales price, not the cost, which is really nice. And what's this going to do for us? Once again, it's an invoice. It's going to increase the accounts receivable. The other side's going to be increasing sales, but it's going to increase sales for the sales price, which was the $7,774, and the difference between the accounts receivable and sales, that's going to be going up to the payable of the sales tax payable. We also know that the inventory is going to go down by some cost that's not on the invoice, but it's driven by the invoice, and the system knows about it because of the item. The item has the cost in it, and the cost of goods sold is going to be an expense that will also be reflecting the expense of that cost as well. So let's uncheck this first and then say save and close, and we'll double check that that is indeed the case. That we've seen this, we've ran through this a few times, so we'll do it quicker here. We're going to say, all right, accounts receivable, $35,231, double clicking on it. There's the music stuff store. If I double click on it, is that the one I was just looking at? I'm going to close this back out. Actually, I'm on Eric Music, which is the, no, I'm on the music, that's it, that's the one, it was the prior date. So we're going to say music stuff store. Let's change the date on this one again to the 20th. So it's after the one we just did. And then I'm going to say save and close. So I changed the date on that one. If you don't change the date, it shouldn't bother you. It shouldn't mess anything up too badly, but I'm going to put it afterwards. So there it is. And then I'm going to close this back out. The other side's going to be on the income statement or profit and loss, P&L. So we have the sales, double clicking on the sales. There it is, double clicking on that item. We have it, the sales price, not including the sales tax. The difference of the sales tax, $388.70, is going to be on a payable. Closing this back out, closing this back out. If we then go to the balance sheet and scroll down to the payable, we have the sales tax payable, double clicking on that. There's the difference, the $388.70 in the payable. Closing this back out, scrolling back up. We also know that the inventory is going down, double clicking on the inventory. We have the inventory, the $5,980, double clicking on that. That number not on the invoice, but driven by the invoice, known by the item that we set up. Closing this back out, closing this back out. Then on the profit and loss, the other side of that is on the profit and loss. It's going to be in the cost of goods sold. Double clicking the cost of goods sold. We see that $5,980 again. That's the other side of it there. Closing this back out. We also note on the balance sheet that we have the accounts receivable at the $35,231. We should see that on the subledger as well in the customer balance detail at the $35,231 down here. And we just dealt with the music stuff store. So there's the invoice in our detailed report there. If we go back to the balance sheet, we also see the inventory. So we have the inventory at the 1952. If we go to our inventory detailed report, we see the total of the inventory at the 1952 now as well. So let's just take a look at what we have thus far. Here's our balance sheet. If you're following along, you can check your numbers on the balance sheet here. If there's something that's wrong, I would check the date ranges and see if it's a date issue. I'm going to go to the P&L. Here's what we have in the P&L. I'll now open the trial balance because I think that's the easiest format to check your numbers in. So this is going to be the trial balance, changing the dates from 01/01/21 to 12/31/21. And there is our trial balance.